This syllabus is all about accounting and recording business transactions. But what is accounting?
Accounting is the process of recording, analyzing, summarizing, and communicating financial information to interested parties.
And what exactly is recorded, analyzed, summarized, and communicated to interested parties?
Here we refer to business transactions that are recorded, analyzed, summarized, and communicated to interested parties.
What is meant exactly by transactions?
Transactions refer to dealings or interactions between two individuals, two businesses, or a business and an individual, which involve the transfer of some economic benefit. The economic benefit can be in the form of cash or cash equivalents.
Can we have a brief overview of the accounting process?
Sure. The entire accounting process is made up of 4 steps. Firstly, we need to extract preliminary information about transactions from source documents, as listed here. Having done that, the second step is to enter those preliminary information in books of prime entry. We have 6 such books to consider. Thirdly, whatever we have entered in the books of prime entry have to be transferred to another set of books, called ledger books. We have 3 ledger books to consider. And finally, based on whatever information that we have in the ledger books, we can now prepare the financial statements. Interested parties obtain information about the entity from these financial statements. Hence, it is very important to carefully record the transactions right from the first step. Or else, we might end up providing misleading information to the interested users in the financial statements.
What is the first step in recording business transactions?
Information is first extracted from source documents.
And what is a source document?
Whenever a business transaction takes place involving sales or purchases, receiving or paying money, or owing or being owed money, it is usual for the transaction to be recorded on a document. These documents are the source of all the information recorded by a business.
Can we have a list of source documents from which details of transactions are extracted?
Sure. We need to understand the functions of each of the following source documents: quotation, purchase order, sales order, goods dispatch note, goods received note, invoice, debit note, credit note, statement of account, remittance advice, and receipt. Source documents should be issued by the business in the same order as shown above.
Let us now understand the function of each source document. What is a quotation?
A quotation is a document sent to a customer by a company stating the fixed price that would be charged to produce or deliver goods or services. Quotations tend to be used when businesses do not have a standard listing of prices for products, for example when the time, materials, and skills required for each job vary according to the customer's needs. Quotations can't be changed once they have been accepted by the customer.
What is a purchase order?
A purchase order is a document of the company that details goods or services which the company wishes to purchase from another company. 2 copies of a purchase order are often made. One is sent to the company from which the goods or services will be purchased, and the other is kept internally so the company can keep track of its orders. Purchase orders are often sequentially numbered.
What is a sales order?
A sales order is a document of the company that details an order placed by a customer for goods or services. The customer may have sent a purchase order to the company, from which the company will then generate a sales order. Sales orders are usually sequentially numbered so that the company can keep track of orders placed by customers.
What is a goods dispatch note?
A goods dispatch note, or GDN, is a document of the company that lists the goods that the company has sent out to a customer. The company will keep a record of goods dispatch notes in case of any queries by customers about the goods sent. The customer will compare the goods dispatch note to what they receive to make sure all the items listed have been delivered and are the right specification.
What is a goods received note?
A goods received note, or GRN, is a document of the company that lists the goods that a business has received from a supplier. A goods received note is usually prepared by the business's own warehouse or goods receiving area.
What is an invoice?
When a business sells goods or services on credit to a customer, it sends out an invoice. The details on the invoice should match the details on the sales order. The invoice is a request for the customer to pay what they owe. When a business buys goods or services on credit, it receives an invoice from the supplier. The details on the invoice should match the details on the purchase order.
What is a debit note?
A debit note might be issued to adjust an invoice already issued. This is also commonly achieved by issuing a revised invoice after raising a credit or debit note purely for internal purposes, that is, to keep the record straight. However, more commonly, a debit note is issued to a supplier when damaged goods are being returned to the supplier. On the other hand, upon receipt of the debit note, the supplier has to issue a credit note to its customer in response to that debit note.
What is a credit note?
A credit note is a document sent by a supplier to a customer in respect of goods returned or overpayments made by the customer. It is a negative invoice.
What is a statement of account?
A statement of account is a document sent out by a supplier to a customer listing the transactions on the customer's account, including all invoices and credit notes issued, and all payments received from the customer. The statement is useful as it allows the customer to reconcile the amount that they believe they owe the supplier to the amount the supplier believes they are owed. Any differences can then be queried.
What is a remittance advice?
A remittance advice is a document sent to a supplier with a payment detailing which invoices are being paid and which credit notes offset. A remittance advice allows the supplier to update the customer's records to show which invoices have been paid and which are still outstanding. It also confirms the amount being paid so that any discrepancies can be easily identified and investigated.
What is a receipt?
A receipt is a document confirming confirmation that a payment has been received. This is usually in respect of cash sales, for example, a till receipt from a cash register.